Hi there, welcome to Kneppy Invest. When I first started investing many years ago, I was taught and I learned that there was only one way to invest, and that way was to research companies. And when you find a company you like based off whether it has a moat or a competitive advantage, whether it has good management and good potential growth, or it is growing right now, that's when you might take a position in that company for the long term. And the only reason you might sell out of the company is if the story changes. And even today, when I listen to podcasts, and I listen to a lot of finance podcasts, that is the same sort of thing that is being taught to investors today, that is the only way that you invest. But in my opinion, there are a myriad of ways of investing, a myriad of strategies, many strategies are out there that you can deploy. And the best strategy for you may not be that strategy that everyone is teaching investors today. And one of those strategies that doesn't get mentioned a lot is all about positive sentiment. It's all about investing in those companies where the share price is increasing. And the reason this can be successful is because when you look at the short to medium term, share price is largely determined by psychology or sentiment. And if you can read psychology and the overall sentiment of the market based off the general market or just based off the individual companies, then you can increase your returns over the long term. So in this video, I'm going to separate it into two parts. And in each part, I'll be giving you 10 companies or stocks where there is some positive sentiment behind the company, where the share price is increasing and has been increasing for quite a while. So let's get stuck into it. And the first company I'll be showing you is AUB Group. Is the first company. And interestingly enough, the first two companies I'll be showing you in this video are in the same field, insurance broking, which probably does tell us there's a fair bit of positive sentiment right now in this field. AUB Group, probably the other thing I should mention is I won't be discussing the market cap of the company, the financials of the company, whether they're growing revenue, profit, that sort of thing. The only thing I'll be looking at is the chart. And just by looking at a chart, we can determine whether there's positive sentiment behind a company, neutral sentiment, or negative sentiment. Is the share price increasing, going sideways, or decreasing? So for most of these companies in this video, the share price has been increasing for quite a while. And that's definitely true for AUB Group. Share price has been increasing since May of 2020. The share price was around $11, and right now the share price is $25. So the share price has more than doubled over the past 18 months. And in all the charts I'll be showing you, I do provide three moving averages, 25, 50, and 100. I usually also look at the 15-day and the 200-day moving average, but I just don't want to make the chart look as cluttered, so I've just deleted both of those moving averages from this particular chart. But you don't really need those two averages. All you need to see here is the moving averages going up through time, and the longer term moving average, the 100-day moving average, is the bottom of the moving averages. And that's definitely what you see here. I want to see the two shorter term moving averages remain above the longer term moving average. Doesn't matter if the share price moves below the longer term moving average or the 100-day moving average for a brief period of time. And we have seen that on occasion with AUB Group over the past 18 months. We saw that in August last year, January this year, and then twice in the past 3 or 4 months. But both times the share price moves below the 100-day moving average, we see a quick recovery and the share price starts to move up again. And more importantly, those two shorter term moving averages remain above the 100-day moving average. In saying all that, even though share price has increased over the past 18 months for this company, if you just focus on the last 4 months for AUB Group, it does look like the share price has been struggling up until the last week. And in fact, the last week, the share price has moved towards the all-time high, which was reached in August of this year at $25.50. And the share price can move above $25.50 on strength, which is high volume. that would be a bullish move. But $25.50 at this point in time is a little bit of a resistance level, so it might struggle to get above that. And if it does struggle to get above that, I'd probably say instead of there being positive sentiment behind this company, I'd probably call it more neutral, and therefore I'd probably say this would not be a buy at that point in time. The other insurance broking company is Steadfast, and very similar chart to AUB Group. Now, Steadfast is the bigger of the two companies and has a higher market cap, more revenue, a higher profit, that sort of thing. But the share price is lower. In fact, it's lower by a fair bit, $5.15 right now. And I still find it, I'm not sure if it's amusing or concerned, that there's a lot of investors out there who just look at the share price and determine the value of a company based off the share price. So there's a lot of investors out there who think or see the share price of Steadfast being $5.15 and think this is the cheaper company. That's not how you determine whether a company is expensive or cheap or just the value of a company. Steadfast is the higher valued company. It has a higher market cap. It just has more shares on issue. And I still find that quite amusing. There's a lot of investors who don't know that sort of thing, a very important thing to know about. Anyway, I am a little bit more bullish in regards to Steadfast than I am AUB Group, just looking at the last 4 months. The Steadfast share price hasn't grown quite as much over the past 18 months. If we go back to May last year, the share price was around $3, $3.10. So it hasn't quite doubled in share price during that period, unlike AUB Group. But the share price right now is almost at an all-time high. The most recent, or the all-time high, was reached November this year. And over the past few weeks, the share price looks like it wants to get above that all-time high. And just like AUB Group, we do see dips on occasion. And the last 2 dips we have seen towards the end of October and during December, that was a good time to buy. So at this point in time, a little bit more bullish around Steadfast than AUB Group. But I think if we do see the share price getting above about $5.20 for Steadfast, that would be another bullish move for this company. The third company we'll be looking at is Johns Lyng Group. This is a company I do own for full disclosure purposes. I bought this company simply because there was some positive sentiment behind it, even though the value of this company, or we'll say this company was expensive. The PE ratio when I bought was something like 50 or 60. Now it's something like 80, ridiculously high. But you can just see the effects of positive sentiment behind the company. Share price just keeps on increasing, even though the PE ratio keeps on increasing with it. So this is multiple expansion. There is some financial expansion happening, but a lot of the increase in this company's share price is because the market is more and more willing to pay premium for this company's shares. So I did buy back in June at $4.20 on a little bit of a dip, and then I bought on confirmation that that was a dip as the share price started to go up again. Recently, maybe a week or 2 weeks ago, they announced an acquisition in America, and the market absolutely loved this acquisition. Share price increased something like 20% on the back of this acquisition. Now I was a little bit wary that the share price might pull back because the share price had run up a fair bit, but there was a bit of a flag or pennant over the past 6 or 7 trading days, which tells me there's still a lot of strength in this company moving forward, and it wouldn't surprise me to see the share price keep on increasing from here on in. We saw a pretty big dip back in August of this year. Share price fell from $6.50 down to $5.40, and there was one big day where share price dropped by a fair bit on high volume, and that was a bit of a red flag, but it wasn't enough for me to sell out, and we did see the share price recover. So in these sort of situations, when a company is valued fairly highly, quite expensive, I do think you have to pay closer and closer attention to the movements of the share price, because when sentiment shifts in this company, there is potential the share price can take a fair bit of a hit in a short period of time. From a company that I did take a position in to a company that I wish I took a position in, and that is Supply Network. This share price has been moving up ever since May of last year. So a lot of these companies went into an uptrend, went into positive sentiment period in May of last year, just after the COVID-19 financial panic. Back then, the share price was around $4, and the current share price of this company is $10.71. The most recent move up in the share price, which happened in the middle of November, was around some positive results, if I remember correctly, an upgrade in their profits, and we saw the share price increase from $8 to $10.50. And since that significant rise in share price, just like John Lyng's group, share price has been moving sideways, sort of a pennant or a flag, which is a bullish sign. So it wouldn't surprise me to see supply networks to continue rising in share price from here on in. But another classic uptrend, another company with positive sentiment behind it. And how long the positive sentiment remains, who knows? It could remain here for another 2, 3, 5 years. Share price could just keep on increasing during that period. And that's the reason you take a position when there's positive sentiment behind the company. And as soon as that positive sentiment shifts to negative or neutral, that's when you sell out and take your profits. Next company is Shine Justice. And right now it is an interesting look because the share price has dipped towards a 100-day moving average. And ever since the sentiment in this company shifted back in late August, early September of 2020, every single time the share price moves towards that 100-day moving average, that was a time to take a position in this company. And the share price has increased 50% or just over 50% in the last 15 months. If you don't know who Shine Justice is, I know him as Shine Lawyers. I was a shareholder of this company just after they listed. Sentiment shifted just before those bad things happened with Slater and Gordon. And when Slater and Gordon went through those problems about 4 or 5 years ago, Shine Lawyers or Shine Justice share price took a massive hit as well. But sentiment definitely has shifted over the past 15 months, and the share price is in a nice uptrend. And again, there has been a bit of a dip ever since that share price reached a high of about $1.60 towards the start of November, and the share price has moved towards that 100-day moving average. So right now, it could be a good time to take a small or even a medium-sized position in Shine Justice because of the recent dip we've seen in the share price over the past month and a half. Next company, OFX Group, is a company I took a position in because of a shift in sentiment back in May of this year. And the share price increased to about $1.30 on the back of some positive news from that company. And that is the time we saw positive sentiment come into the company. We saw the shift in trend from sort of a neutral to slightly negative trend to a positive trend. And this was a good time trade on my part. We saw the share price move above a bit of a resistance level at $1.30. It tested that resistance level over the next month, but has kept on increasing its share price from there on in. And the share price has increased from $1.30 to a current share price of $2.35. And just like every other company I'm being showing you, we have seen dips in the share price. Share price has moved towards that 100-day moving average, and every time we see it, share price dips towards that, that is the time to take a position. Really interesting trading in this company over the past 2 weeks because on one day we saw the share price take a massive hit. In fact, it fell from about $2, I think it was $2.08 to about $1.88 on one day on fairly large volume, not massive volume. And I think what happened was there were some people who knew OFX Group were going to make an acquisition in the next week. And they thought there more than likely was going to be a capital raising and a bit of a discount to the capital raising, and they could take advantage of that discounted capital raising and buy in at cheaper prices. But what happened? OFX Group announced an acquisition and the market absolutely loved it, and the share price has taken off from that acquisition. In fact, it's increased from $1.88 to a current share price of $2.35. And right now the share price is at long-term highs and a lot of positive sentiment behind this company right now. Wouldn't surprise to see the share price to go sideways for a bit of time or to make another bit of a dip because we'll just see a lot of profit takers coming in, taking their profits because the share price has taken off or increased by well over 50% over the past 6 or 7 months. Next company is a fairly popular company among not only fund managers but also retail investors. This is another company I have owned in the past and I sold way too soon just because I was in profits and I thought I'd lock in those profits. I think when I sold the share price, this company, share price was like $50. And if I just held on, remained patient, I would have quadrupled those profits. Anyway, the share price of Macquarie Group has been in an uptrend ever since about June, July last year when the share price was about $120. And just like every single company we've mentioned in this video, whenever the share price dips towards that 100-day moving average or just dips below it, that's the time to take a position in this company. And right now, share price is just above $200. We saw another dip in the share price around the time they did a capital raising, if I remember correctly. Share price dipped towards $188, not quite towards a 100-day moving average, but that was by the dip situation. Share price had moved towards $208 recently, which was the high we saw back in the middle of November, and struggled to get above it. So possibly $208 could be a bit of a resistance level. I've also heard some people mention that this is a hold or even sell. These are fund managers just because of the valuation of the company and the run of the share price over the past 18 months. So maybe that's why the share price has been moving sideways over the past month and a half. But still, the company's share price is in an uptrend, and there's still some positive sentiment behind this company right now. So I definitely wouldn't be selling if I was holding. Potentially, I would be buying if the share price moves above $208 on some strength. As we talk about positive sentiment driving the share price of a company higher, that's definitely been true for Pilbara Minerals. A lot of tailwinds behind this company, a lot of positive sentiment driving the share price higher over the past 15 to 18 months. The positive or the sentiment in this company started to shift in June or July last year, but definitely shifted in November of last year when the share price was around 40 cents and has continued to climb over the past 13, 14 months and has risen from that 40 cents to a current share price of, we'll say, $3. So it's almost an 8-bagger in just over 1 year. And just like many of the other companies that I've shown you in this video, when their share price gets towards that 100-day moving average, it's sort of the buy the dip situation. That definitely happened in October this year. The share price fell from $2.50 to $1.80. Share price touched the 100-day moving average, and that was the time to take a position in this company if you're following that positive sentiment strategy. And the share price has moved from $1.80 to $3 since that buy the dip situation. So share price right now for Pilbara Minerals is at an all-time high at $2.96. A lot of positive sentiment behind this company. The share price is in a well-defined uptrend. No need to take profits right now because the share price could keep on climbing from here on in just because of all those reasons I've just mentioned. Now to a company I know nothing about. I've not done any research on this company at all. I'm not even sure how to pronounce it. Do we just say NZME or NZME or New Zealand Me? I don't know. But this is New Zealand Media and Entertainment. Obviously enough, they're in that sort of field of media and entertainment. But a lot of positive sentiment behind this company over the past, say, 15 months. So if we go back to August of last year, share price was really struggling at around 25 cents. And then all of a sudden, share price popped up towards the end of August. Share price actually increased from 31 cents to about 44 cents in a few days. And the share price just has kept on increasing from that little increase in share price. So not sure what happened then. Could have been some good positive news. And some investors won't buy into a company when they see that share price increased because of recency bias. And this should be some more proof that you should not be hesitant when you see a company release some good news and the share price pop up like it did with New Zealand Me. The share price has continued to increase since then. Share price has increased from about 40 cents to a current share price of $1.35. We did see a period of time between March and July of this year. The share price was falling at a very slow rate on decreasing volume, and then at the start of July, share price took off again. It broke out of that short-term malaise. Again, maybe there was some positive news, and that was a catalyst behind the share price increasing. In fact, the share price has increased from about 70 cents to the current share price of $1.35. So it's almost doubled from that breakout in July. So that's a nice little return over a 6-month period. And the final company for this video, part 1, is IGO Group. I know this company as Independence Group, but they want to be known as IGO Group. They are a miner of nickel, copper, gold. I could be completely mistaken with that, but that's what I think they do. I haven't done any research on this company. But if we go back to December of last year, we see another breakout in the share price on massive volume. More than likely, they released some good news, and the share price increased in that one day from $5 to about $6.20. Again, share price increased by a fair bit in one day, and again, a lot of shareholders, because of recency bias, would never take a position in a company on that sort of share price increase. But if you look at what happened over the next 2 weeks, the share price just went sideways, a bit of a flag or a pennant. There was not a lot of selling, and that shows you there is a lot of strength in that announcement, and then more than likely the share price will increase from there on in. It took a while for confirmation that the share price will increase, because the share price actually went sideways over the next 3 months, because if you go back or look forward to March of this year, share price retested $6, which was a good support level, and then when it retested, that's when the share price finally took off, and the share price has increased from that $6 to a current share price of $11.35. So it has almost doubled in share price over the past 9 to 10 months. So a nice increase in share price for IGO Group. Share price is in a well-defined uptrend. Quite a bit of positive sentiment behind this company. I don't know if $11.35 is an all-time high for this company's share price, but it is at a long-term high. So a lot of things going forward for this company right now. A lot of positive signs, a lot of positive sentiment behind this company. So yeah, that's all I have to say about IGO Group. And that's all I have for this part 1 to 20 stocks to buy based off positive sentiment. This is a legitimate trading or investing strategy. Why would you be holding companies whose share price is falling? Why not just hold companies whose share price is increasing, where there is positive sentiment driving that share price higher and higher? And then just wait for that positive sentiment to shift to neutral or negative, and then take your profits. That seems like a legitimate strategy, but I hear very little about this sort of strategy being talked about among professionals. But I think it's a definite, legitimate strategy, and it's actually a strategy I am using more and more right now. If you have any questions about this strategy or any other companies or any of those companies I've mentioned in this video, leave a comment, your questions, your thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.